Dear viewers, welcome to this episode of Your Life, Your Money. Many people have asked me, how should I take loan? Should I really take a loan or buy something using my own funds? There are many things that need to be discussed when you take a loan. This episode is for those people who are considering taking loans for something that they want to buy in life. I'll be talking about everything you must keep in mind before you take that particular loan. This is NRI Money Clinic for you, and I am Dr. Chandrakant, but your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Let's discuss about the various aspects of taking loans. At the outset, let me tell you, taking a loan basically constricts your future financial life. What does it mean by taking a loan? It only means to say something that you cannot afford today. You want it now, that's why you are borrowing money and you are buying this. When you borrow money, what happens? You have to pay the principals and you have to pay the interest. When you have to pay the interest, let's say that you are a salaried person, the total amount of salary you get in your lifetime remains static. It will not change because you have taken a loan. The amount of salary that you bring in could have been used to pay the principal, it could have been used for reaching other life goals, but a portion of that will go out as interest. More and more interest you pay in your lifetime, it means you are using the precious resources for payment of interest. So that your life will start getting constricted because you are using these resources to pay the interest. So by and large, with a few exceptions, it is safe to say loans that you take will be not in your best interest. Let's dig more into it during this course of this episode. Now let's look at what is that you are going to buy taking the loans. It could be an essential item. For example, you could be buying a refrigerator, or it could be a washing machine, or it could be a television. It could be something which is non-essential. For example, you have already got a phone, it's working fine, you are not experiencing something of a difficulty over there, but just because your friend bought a latest model or there is a new variant of that phone as available in the market, you decide to buy it. Likewise, similar thing with your car, similar approach towards the jewelries which are considered as non-essential. So think about it, am I buying something through a loan, the essential part or a non-essential part? The other thing that you can consider is, am I buying an asset which is depreciating in its value over a period of time? Let's assume that you bought the latest version of a phone which costs you 1.5 lakh. What will be its value 1 year down the line, 2 years down the line, 3 years down the line? Or you think the other way, what if I buy this asset after, let's say, 1 year, what could be its price? So is it a depreciating asset? You buy it and it will have a depreciating value over a period of time. Your cars, your gadgets, your washing machine, refrigerator, all these will fall into a category of asset which will fast depreciate in its value. There could be other assets that you might be buying which could appreciate over a period of time. For example, you bought a parcel of land taking a loan. You bought a house taking a loan. Or you could have picked up some stocks or mutual funds by taking a loan. These will have a tendency to appreciate over a period of time. I stress the word tendency. I use the word may appreciate because there is no guarantee that the assets that you have purchased will rise in prices over a period of time. But it is safe to say probably in the long period, let's say 10 years, 15 years, 20 years, 30 years, such assets as land and buildings, such assets as commodities will increase in price both because of demand as well as because of the inflation which runs through the economy. So when you take something on a loan, categorize them as an appreciating asset or a depreciating asset. If it is a depreciating asset, you have to be extremely careful. If it is an appreciating asset, there are other considerations which have to be looked at as well. Let's look at the another popular reason for which people take the loan. That reason is buying a home. Home loans are very popular. How does the home loan fall into this category. Again, it depends on personal situation. Are you in India? Are you in a developed countries like Europe, Canada, England, Singapore, Australia, or in the Middle East? Your situation can be different in these places. In India, probably it makes absolute sense for you to stay in a rented house because the rents are just 2% of the purchase cost. Today, look at the home loan interest. It's at about 9.5%. Maybe over a period of time it will come down, but a rental market which quotes 2% as the rent for the properties is too attractive for anyone to live. Plus, consider your personal situations. Are you going to go and live in that house? Let's say that you have a business next door and you buy a house, you go and live there. It might make sense. But think about somebody who works in a corporate, somebody who is working in an IT sector. Today he is in this company. 3 years later, he might be moving places within India or outside India. Then what do? You take a loan, you have to pay the EMI and you have to rent it out because you are not going to live there. The rent what you get is just 2%. The EMI what you are paying will be 9.5% at current rate. It doesn't make any sense for you to take that home loan. So you have to carefully consider your personal situation as well as what happens to the rentals if I were to be not there, living there. Take the case of the developed economies. There the story is something different. Your rentals are pretty high. If you buy your property, let's say in Dubai or in UK or in Canada or in US, the rentals and the EMIs what you pay is similar, and in many cases the rent is higher and the EMI is lower. In such cases, it makes absolute sense for you to buy the property on loans, live there, and if you were to be not living in that property, probably you move to another place, you can rent it out and the rents can more or less offset the EMI you have to pay for it. So the situations are different within India and situation is different outside of India, and you have to take a decision based on what is favorable for you. Now let us look at why people take loans. There are many reasons because of which people take loans. The first reason is the attitude called I want it now and the attitude of impulsive buying. You go to an exhibition and you see something and you get impressed. You see a hoarding which talks about very attractive jewelry and you get impulsively moved to buy the jewelry and gift it to your spouse. Or you saw a latest gadget of an iPhone or something electronic or something like that which attracts you because a couple of your colleagues bought it or your neighbors or relatives or bought it. You want it now and you can't afford it. You don't have the required amount of money. What do? You go for a loan. So this attitude of I want it now and the impulsive buying can be a deadly problem in the lives of many people. Remember one thing. If you buy something which you do not need, at some point of time in your life, you will be forced to sell what you really need to. So it's a poison that taking something on the loan. Think about it. Can I postpone it? Can I avoid it? How can I come out of it? How can I control it? These thoughts must go into your mind. Another reason why people take loans is they don't need it. But every day they are bombarded with emails, telephone calls, and people say, you will get a loan, 0% interest. People will say easy loans. People will say take loans and invest this money. Because you are offered an interest, there are a large number of people who feel very happy because somebody offered them a loan. Don't take a loan because somebody offered you a loan. See, there are no free lunches in this world. A bank which says I will give you a loan without interest should be seen with a full suspicion. What do they say? They say I'll give you a loan, there is no interest, but I'll charge you 3% processing fee. Or there could be something else which is built into it. Bank will make invariably money out of it. Don't get lured by the telecallers who say take it now, invest this money. If you do not need it because somebody called you and offered the loan, please stay away from such loans. There is another category of people who get lured for something else. This is particularly rampant in Middle East. They see Indian rate of interest is very high and they think rate of interest in Dubai is very less And I have interviewed a lot of these people. They say, why did you take the loan? Because the interest rate in Dubai is so low. I will take loan from here, send it to India, buy some land, buy something, or put this in an FD. Please do not do this. See, you have to understand one thing. When the interest rate differential is very high between two countries, it only means to say there is an inflation differential. The country which offers you a very high rate of interest, let's say in India, and Dubai offers you a very low rate of interest, it means inflation in India is much higher and inflation in Dubai is lesser. The same thing happens with UK or USA, any country you take. Now, when the inflation is higher in one of the countries, that country's currency is prone for going through a devaluation process. People do not take this into account and think that I'm getting loans at a very cheaper rate. So, over a period of time, you realize that the rupee has devalued. When I shifted to Dubai way back in 2010, the dirham to rupee was at about 10 rupees per dirham. Now, dirham to rupee is somewhere around 22 rupees. So, this devaluation happened over last 13 odd years. So, when you take a loan for a lesser interest, keep in mind you might be paying through the nose because of the devaluation of the currency as well. Think about it. If you were to lose job and you have no other recourse to pay this money to the bank, you have to move this money from India back into the bank because you have to clear the loan. Bank will not let you go. And at that point of time, what if the depreciated rupee can't earn you enough of those dirhams or dollars or pounds or whatever it is? So do not take a loan because there is an interest rate differential between the two countries. The other reason people take loan is because I'm in trouble. I have some problem on hand. I've just started. There is a family problem. Somebody is sick. I need money for the treatment. There is a house which needs repair. There is something which happened which is out of control. I don't have the requisite money with me right now. So I'll solve that problem by taking a loan. Remember, I will not say that you should not take loan at such point of time. You have to tide over the crisis. It's the obvious thing to do. But remember, this is a painkiller. You have to solve the fundamental problem of why you got into this problem, why you didn't have the money. Is it that the situation happened before you started money? Is it the situation which is out of control? Is it because of some things which you could have controlled? Are you in problem because of your habits of overspending than the income that you have? Dig into all these things. So you can solve this problem by taking a loan. But you have to solve the underlying fundamental reason why you got into this problem. If you are overspending than your income, you have two options in front of you. One, consciously reduce your expense. Go through that entire list. Find out what you can avoid, how you can reduce your expenses. This is one way of looking at it. The other way could be, if these expenses are real and they cannot be avoided, then you have to increase your income. Think about it, how you can increase your income. Can I change the job? Can I move places? Can I move to another country? Can I ask for a raise? Can I add a skill and increase my ability to earn? Can I do an odd job beyond my office hours and add some income to my family? You have to solve the fundamental problem because of which you are forced to take a loan. So by all means, take a loan, come out of it, but make sure that the fundamental problem is solved. Recently, somebody sent me a message on my personal number and he said, I'm in such and such a problem and I expect you to solve my problem. I told the gentleman only one thing. You need to sell a few parcels of land and buildings that you have got into. This gentleman has taken so much of a loan beyond his ability to pay for it, and he was going round and round and round, and there is no way he could have cleared this loan. The only way he could have come out of it is by liquidating that asset. He bought things which he did not need. Today, he is forced into selling what he is in really need of. So this is exactly what happens when you take loans with recklessness. Now let us look at where the loans will become useful for you. The loans will become very useful, especially when you are taking home loans. Why home loans are very beneficial for you? Number one, home loans are secured against that asset. So you have an asset which is backing that loan. So you are quite secure. Maybe if you walk out of the house, that's a problem. But the loan that you have taken is secured against the property. This property will over longer periods of time definitely appreciate. It may not appreciate in 1 year, 2 year, 5 year. When you take a home loan, your situation will not turn that bad in a year or two, but in longer periods of time, the property will invariably appreciate. The interest rate available on home loans is really cheap. I've done detailed videos on my channel where I have articulated why it makes absolute sense for you to take a home loan. I'm considering a case of somebody who has the money. He can make a down payment, buy this property, or he has an option to invest this money and take the house on a home loan. It makes absolute sense for you to take the home loan. Home loan rates are really low, and the total amount of interest you pay keeps diminishing month after month, year after year. Whereas the money that you have, whether it's a lump sum or whether that extra money that you have to invest, will compound upwards. So over longer periods of time, it's perfectly possible by taking a home loan and playing with this investment of the surplus that you have, you can make this property completely free of cost for you. That's a perfect possibility. Likewise, in case of developed world where your EMIs and the rents are similar, it makes absolute sense for you to take the home loan, because the rent what you pay otherwise will be written off. When you buy the home and you keep clearing your EMIs, you create an equity in your life. That is where the home loans will come handy for you. Another place where the loans can come, I'll use these words with extreme caution, that you can take a loan when the markets are deeply corrected. Not in today's market, which is a raging bull market. This is not a time where you can borrow money and invest in stocks or mutual funds or anything. But if markets are deeply corrected, when I say markets are deeply corrected, it means whatever you see today, if markets correct by 20-30% or more, then there is a possibility that you can say, I have a chance to borrow money and invest, but it should be used with extreme caution. As a planner, it's not my responsibility to encourage anyone to take loans and invest in stocks and mutual fund. To best possible extent, completely avoid it, but once in a while, probably once in a decade or twice in a decade, markets give you that opportunity where you can take loan, invest, and you can make money out of it. But these incidences are extremely rare. Now let's look at what happens when you take a loan. I see three major issues. One, because of the interest you pay, your financial life get constricted. Let's say that you have got 1 crore of rupee. You can use this crore to invest, buy something, or do anything. But out of this 1 crore total salary you have earned in your lifetime, let's say you end up paying 20 lakhs as the interest. That means your life is constricted by 20 lakhs. This is effect number one. Effect number two is you have a salary and you are committed to pay an EMI. That means you have an obligation. Somebody is holding a gun against you and say, pay me every month. And think about it, if you lose your job, or think about something going wrong at a family level, or you and your wife will get into a fight because your EMI will be so high that you can't do anything else, and the families want something, and it can create a craving within the family that I can't do it because of the loan that you have taken. So this creates a problem. It also creates a stress at the back of your mind. I have to pay for so many years. What happens? What's happened? Most people cannot withstand this stress. So they try to say, I don't want loan. Remember, when you take a loan, stress is an unwanted guest living in your house. So what can you do to avoid these loans? Number one, when you get soliciting calls offering you the loans, just say you're not interested. Don't even listen to them. If you do not need anything because somebody is offering a loan, a clear no should be your answer. Ask yourself before you take a loan, is it my essential? Can I live without it? Can I postpone it? Let's say that you have got a telephone. Nothing is creating a problem because of a particular brand of mobile phone you are having. If it doesn't create any problem for you, then why should you go and buy something which is new? It is your impulsive buying. If it is non-essential, your life is not going to get affected. Do not go for it. Also ask your question, can I postpone it? If you can postpone it, then you can plan it. Instead of taking a loan, probably you can start an RD account, you can start a SIP account, you can build funds, and then you can buy. So if it is non-essential, if it is non-urgent, category of item that you are going to buy, just avoid it and better plan for it. One best suggestion that I can give you is when you invest your money, have a revolving fund. A revolving fund is you build an amount of money and you don't categorize it for any particular thing. You think that we need some essentials for my house. I use this money in the revolving fund to buy it. Let me help you with an example now. You have a refrigerator, it has a life. You have a television, it has a life. You have a washing machine, it has a life. You want your furniture to be replaced after a certain number of years. So you calculate in the next 10 years what all the things probably you would end up buying. And you divide it, and in your budget provide for that, and you invest either in an RD account or in a mutual fund account or any other place you think. Don't put it in the stocks, right? So put it in the safer mutual fund like a multi-asset fund or a conservative fund or a debt fund or whatever that is, depending on your time horizon. Build that revolving fund. Whenever a need arises, let's say that your fridge is not working and you have to replace it with a new one, take out the money from the revolving fund and use it. So you do it for everything. Have a revolving fund in your life. Keep putting money out of your budget into the revolving fund. Identify it clearly that it's a revolving fund. It is for essential purchase. That can solve a lot of problems of ending up with loans for buying the essentials. Now, if you end up in a situation where you have to take a loan, how should you negotiate? What is that you have to keep in mind? What is that you should do and what is that you should avoid? Many people do this mistake. Number one, when you're taking a loan, let's say a personal loan, ask them, is it a reducing interest or is it a flat interest? It's a lure that happens in Middle East. They say that it is 4% and you get very, very attracted with that 4%. But it's a flat rate. When you take a loan on flat rate, multiply approximately by 1.8. That means if you're getting at 4%, probably your actual rate is on a reducing balance is 4 multiplied by 1.8 approximately could be in the region of 7.6%. In Middle East, there are loans people take at 7% flat rate, 8% flat rate. Anything is possible. So don't get lured by that number. Ask it. If it is a flat rate of interest, the first thing that you have to keep in mind is make the tenure as short as possible. A bank can give you for 1 year, and you can clear it in 3 months, take it for 3 months, take it for 6 months. In flat rate loans, reduce the tenure to the best possible extent. Try to prepay it as fast as possible. That is what you do. If it is a low rate of return, then find out why you are taking that loan. If you are taking that loan for purchase of a house, let's say, you should take a housing loan for the longest duration which the bank is prepared to give you. Some people get worked out with, I have to pay so much of an interest. That's why I take a 5-year housing loan, 10-year housing loan. Don't do this mistake. Instead, ask the bank, what is the longest tenure you can give? Generally, banks offer up to 30 years for purchase of home loans. In India, NRIs easily get up to 15 years and probably it's possible for NRIs to get it up to 20 years. For NRIs may not get 30 years long loans. So take a long loan. What is the advantage of it? When you take the housing loan for a longer period of time, your EMI will become smaller. This has multiple benefits for you. When the EMIs are lesser, it is easier for you to manage this loan if something were to go wrong in your life. Keep the EMI lower. Likewise, over longer periods of time, the properties will appreciate. It will not unlikely that the properties will depreciate. So keep it for the longest possible tenure. Likewise, the banks may offer you a fixed rate of return or a floating rate of return. Invariably, if it is a case of India, you always ask for floating rate of interest. That means today at 9.5%, the rate of interest is likely to fall down. If you opt for a fixed rate of return throughout the tenure of the loan, you have to pay the same rate of return. It will not change. By opting for a floating rate of return, when the interest rates fall, you have the recourse to pay the interest at the prevailing low rate of interest. Sometimes, particularly in the developed world, the situation could be reversed, wherein which for most part they have a very low rate of interest. If you think this is a very low rate of interest, it happened in the last 10-15 years in US, and a lot of people did the right thing by locking into the current interest rate of 2%, 2.5%, 1.5%, 3% for their lifetime. And now the interest rates are at 9% in developed world, but they are not required to pay at 9% because they opted for fixed rate of interest. They will will continue to pay the old rate of interest. So it worked in their favor. So the things to remember here is, if you are going through a high rate interest regime, opt for a floating rate of interest. If you are passing through a very low rate of interest rate and it's a judgmental call, there is nothing called right and wrong here, probably it makes sense for you to accept a fixed rate throughout the tenure. So take the help of your advisors, do your due diligence, and arrive at a judgment what works in your favor. If you take these precautions, I do not see why you shouldn't be doing well with housing loan. So dear viewers, hope the video that I have done helped you to understand what happens when you take a loan, where it is beneficial and where it is not beneficial, what you can do to avoid taking the loan, and where you should not hesitate to take the loan. If it did help you to understand these finer points, please do give me a thumbs up. If you are a person who is watching my channel for the first time, or if you are yet to subscribe for the channel, please hit that subscribe button and press the bell icon. By the way, do not forget to share these videos with your friends and relatives and on all the WhatsApp groups on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you next Friday with yet another thought on your life, your money. Till then, stay safe. Jai Bharat.
Press the bell icon for more details and subscribe our channel.